Welcome to Geoscope. For decades, the world has run on a single operating system, the US dollar. It's the bedrock of international trade, the safe haven in times of crisis, and the ultimate source of America's global power. But the tectonic plates of geopolitics are shifting. A new era of great power competition is dawning, and the battlefield is no longer just land, sea, and air. It's the intricate network of global finance itself. This is the story of how the dollar is being weaponized and how the world is starting to fight back. The first shot was fired in early 2025. Citing national security concerns over Iran's advancing nuclear program and its support for regional proxies, the US Treasury issued a stark ultimatum. The directive was aimed not at Tehran directly, but at the financial arteries that keep its economy alive. The order was simple. Any global bank facilitating Iran-linked oil trades, particularly those settled through Chinese financial institutions, would face a catastrophic penalty, complete and total exclusion from the US dollar system. This wasn't a mere fine or a slap on the wrist. This was the financial equivalent of a nuclear option. To be locked out means losing the ability to clear transactions in the world's reserve currency. It means being cut off from the SWIFT messaging system, the lifeblood of international banking. For any major financial institution, it's a death sentence. The message from Washington was unambiguous. You are either with us, or you are against us. Enforce our sanctions to the letter, or be cast out from the global financial order we command. The initial shockwave of the ultimatum hit hardest in Hong Kong. Long the freewheeling gateway between China and the West, the city's unique financial ecosystem had become a critical node for sanctions evasion. The Treasury Department's Office of Foreign Assets Control, or OFAC, moved swiftly, placing 9 Hong Kong-based entities on its specially designated nationals list. These weren't just minor players. They were key cogs in a sophisticated machine designed to launder Iranian oil revenues and disguise their origin. Being blacklisted created a toxic ripple effect. Any bank that knowingly did business with these entities now faced the threat of devastating secondary sanctions. Washington demanded absolute transparency, forcing global banking giants with a major presence in the city like HSBC and Standard Chartered into an impossible position. They were caught between obeying US law and serving a region where their largest growth opportunities lay. At the same time, state-owned institutions like the Bank of China were under immense pressure from Beijing to facilitate a burgeoning new trade. This pressure campaign had an immediate and perhaps unintended consequence. It accelerated a trend that Washington feared most: de-dollarization. As banks grew wary of dollar-based transactions, yuan-based oil deals surged. These weren't back-alley trades, they were increasingly being settled on legitimate platforms like the Shanghai International Energy Exchange. By the end of the first quarter, the numbers told a stunning story. For the first time in history, more than half of Hong Kong's cross-border settlements were being conducted not in dollars, but in Chinese yuan. This wasn't just a statistical anomaly, it was a direct, quantifiable challenge to the dollar's 70-year reign. But even as the financial battle raged in the boardrooms of Hong Kong and New York, a parallel war was being fought on the high seas. Iran, a master of sanctions evasion honed by decades of experience, wasn't standing still. Its sophisticated shadow networks went into overdrive. They deployed a ghost fleet of aging tankers, vessels that would switch off their transponders to go dark for days or weeks at a time. In the dead of night, in remote stretches of the ocean, they'd conduct risky ship-to-ship transfers, mixing Iranian crude with oil from other sources. On paper, a complex web of shell companies created a labyrinthine trail of fake shipping documents, making it nearly impossible to trace the money back to Tehran. Billions moved through hidden pipelines, funding drones, militias, and military programs. The US sanctions struck back, but Tehran's underground engine kept running. China, meanwhile, accelerated its own strategy. The yuan briefly cracked the world's top 4 payment currencies powered by CIPS, Beijing's alternative to SWIFT. UnionPay's digital system spread across Asia, and the digital yuan began creeping into trade from Laos to Pakistan. Step by step, China was building rails for a world less dependent on the dollar. But Washington's pressure came with consequences at home. By April, US consumer sentiment plunged, inflation spiked, and manufacturing flatlined. Tariff swings froze corporate planning while new tax measures risked driving away foreign investment. In trying to tighten its grip abroad, the US was sparking turbulence at home. The aggressive use of sanctions as a foreign policy tool created a new layer of unpredictable risk on Wall Street, causing jitters among investors. American corporations with sprawling global supply chains feared being caught in the economic crossfire. This wasn't just abstract geopolitics, it was a direct threat to domestic economic stability, a self-inflicted wound in the name of projecting power. By mid-year, cracks in the dollar system were widening. Central banks began building an alternate financial architecture. They accelerated bilateral currency swap lines, direct agreements to trade in their own currencies, creating corridors that bypass the dollar entirely. Simultaneously, the race to develop central bank digital currencies, or CBDCs, intensified. China's digital yuan was being tested for cross-border payments, a clear challenge to the US-controlled SWIFT system. Meanwhile, powerful blocs like BRICS moved from quiet conversations to public declarations of their intent to create a new reserve currency. This trend was supercharged by Washington's own actions. On July 30th, the US launched its largest sanctions package against Iran in years, freezing dozens of oil tankers and firms. The goal was maximum pressure, but the strategy had a powerful unintended side effect. By also threatening to punish any other nation that did business with the targeted entities, this extraterritorial reach served as a stark warning to the world. Access to the dollar system was conditional and could be revoked at any time. Yet instead of isolating rivals, the moves pushed more players toward alternatives. China's cross-border interbank payment system, or CIPS, saw a surge in interest as a viable alternative to the US-dominated SWIFT network. Nations began experimenting with pricing oil in Chinese yuan, a direct challenge to the petrodollar. Even traditional US allies in Europe began developing payment channels to insulate their trade from Washington's political whims. The US was using its power so forcefully, it was teaching the world how to live without it. The verdict? America's gamble to enforce dominance may accelerate the very shift it fears, a multipolar financial world. For decades, the US has enjoyed an exorbitant privilege, the ability to issue debt in its own currency, keeping borrowing costs low. In a world where the dollar is just one of several major currencies, that privilege erodes. The result could mean higher interest rates for the US government and, ultimately, for American consumers. The unipolar moment is ending, and a new financial world is being born, where the dollar no longer sets the rules alone. We've journeyed through the intricate web of global finance, exploring how the US dollar achieved its dominant position, and how that power is now being used as a formidable geopolitical tool. The strategy is clear: leverage financial networks to enforce foreign policy. We've seen this with sweeping sanctions against nations like Russia and Iran, effectively cutting them off from the global economic mainstream. But this display of strength carries a significant risk. Forcing countries to seek alternatives could accelerate the very trend Washington aims to prevent: de-dollarization. This brings us to our first critical question. So, what do you think? Has Washington overplayed its hand with these aggressive financial moves? The path to unseating the dollar is fraught with obstacles. The greenback's dominance is built on decades of trust, unparalleled market liquidity, and its role as the world's primary reserve currency. Any challenger faces an uphill battle against this entrenched system, but the landscape is undeniably shifting. China is aggressively promoting the yuan, not just in bilateral trade, but through innovations like its central bank digital currency, the eCNY. The BRICS bloc is actively exploring frameworks to settle trade in local currencies, aiming to create a parallel system entirely. This leads to the pivotal debate: is the yuan, or any other currency, really capable of challenging the dollar's supremacy? This isn't just an abstract debate for economists and bankers. The outcome will reshape the physical world. For half a century, the petrodollar system has inextricably linked global energy markets to the US currency. A significant move by major oil producers to accept other currencies would be a seismic event, redrawing energy trade routes and recalibrating economic power. Global supply chains, already proven to be fragile, could fracture and reform around competing currency zones, impacting the price and availability of everything from semiconductors to automobiles. And most importantly, how do you see this financial power shift affecting global trade and the future of energy? There are no simple answers here. We're witnessing a historic realignment of global power playing out in real time through financial markets. It's a complex story with compelling arguments on all sides, and that's why we want to turn the conversation over to you. Let us know your thoughts in the comments. We'd love to hear from you. Understanding these massive economic shifts is crucial, as they create ripples that affect every industry, including the automotive world we so often cover. To stay ahead of the curve with more deep dive analyses like this, Make sure you subscribe to Piston Pundit and activate notifications so you never miss an update. We appreciate you joining us on this exploration. Thanks for watching, and we'll see you in the next video. You can now check out any of the videos on the screen. There's plenty more to explore.